that for the first time in Altspace, social dilemma and moral dilemma, I'm finally talking about something that I understand, as I actually run a company called Mati Trader, which you can see the banner behind you. If you're interested, you can go to the Facebook group Mati Trader, where you can ask questions, you can get a lot of lessons, and also tomorrow I'm posting the video on what happened last week and how there is a revolution taking place. And I'm not saying that as a marketer, I'm saying that in 19 years of trading, I have never seen what happened last week. And I'm so excited to actually incorporate that into the social dilemma. And we have one exception for today. And because today's topic is more on what I understand, if you have any questions relating to GameStop Redditors community of manipulating the share price or anything like that, trading wise, now it will be your time to ask. All right? Can I see, is everybody still there? But we will start with the social dilemma. But like I said, if you have any questions, I would love to hear. So you can first answer the question and then you may ask your question. So the topic for today is the social dilemma. And before I go to the question, I first want to just tell you quickly what the moral and social dilemma events are. And for the regulars, I'm sorry I have to repeat this every day, but imagine being in my situation. The moral and social dilemma are 1 hour live discussion events on Fridays and Mondays where we ask moral and social dilemmas. We then go around the virtual table to share our thoughts, answers, and ideas. And the goal is to improve our thinking and speaking skills on new levels. And Rebel, who says he would like to improve his speaking and confidence, well, this is the perfect place to do that. And as you know, the topic for today is GameStop, to profit or not to profit. Here is the social dilemma for the day. And my beautiful co-host Ali will be giving you all the megaphones and will be starting on my left. So the social dilemma, I'm going to read it twice. You are an owner and majority shareholder in a company listed on the stock market. Over the last year with COVID-19, you've closed down stores and declared a loss. Followers of a social media forum group together and start buying shares. This sends the share price to rocket 10-fold. Do you sell all your shares knowing the share price is overvalued and will never be that price again? Or do you keep your shares and retain ownership? Let me read that again. You're an owner and majority shareholder in a company listed on the stock market. Over the last year with COVID-19, you've closed down stores and declared a loss. Followers of a social media forum, Reddit, group together and start buying shares. This sends the share price to rocket 10-fold. Do you sell all your shares knowing the share price is overvalued and will never be the price again? Or do you keep your shares and retain ownership? All right, we still have majority of people in the house. Great. And yes, remember, this is a revolution. So I highly suggest you stick around, even if stock market is not, even if the stock market is not your forte, you're going to be reading this a lot in the news. Why? Because the underdogs and the small boys are taking over, and they are going to find ways now to beat the smart money, to beat the hedge funds, and to beat the crooks. So it's important for all of us. And let's start with, first of all, I just want to see a round of emojis. Who've heard about the story with GameStop? Just give me a round of emojis. Wow. Okay, so we can say about half the people here, or just, let's say 3/4 of the people. And to those who are not on the couch, you may raise your hand if you would like to speak, or you can pop onto the couch and you have the opportunity to speak or pass. So enjoy. Let's start with Bezar Berlin. Do you sell all your shares or do you retain ownership?
I don't do any of them.
If you're
What would you do?
what would you do, Bezo?
If I had some,
Yes.
well, at the moment I would sell, probably.
If you were the owner. Now, just know that if you sell all your shares, you lose all your power and you might manipulate the market where they're saying, hold on, the director is selling shares. It means that the company is, there's manipulation being taken place. All right, let's move to Ezio Auditore.
And plus, before we give you any more information about it, if there is something you guys do not understand, feel free to ask first before we direct the conversation.
Definitely ask as many questions as you want. Today's your time. This is what I do for a living for the last 19 years. Ezio Auditore, you have the opportunity to speak or pass.
Well, if I would sell it if it wouldn't hurt the people too much. But if it does, I will not sell it.
Okay. Do you have any questions with regards to GameStop? I'm going to give everybody an opportunity to ask.
No.
Okay. Let's move to the next person. Ali, help me.
Dr. Sam.
Hello, Dr. Sam. Good to see you.
Megaphone is yours. Hi and welcome.
Thank you, Timon. Ali, terrible question. Terrible question because it reminds me 15 years ago, I lost half my savings on the stock exchange exactly with this situation where I invested in a company called WorldCom and people bought against me and I lost half my fortune. So what I would do is if it was public knowledge that my business was in trouble, and everybody knew about it, I would do exactly what Bezo, Berlin, and Ezio did. I would sell my shares if it's public knowledge. Thanks.
Do you have any questions with regards to GameStop?
I think let's go around the couches.
Okay.
And then at the end, we can maybe just discuss for those people who don't understand how amateur investors got together and actually taught the big hedge funds a good lesson.
Definitely.
And how it's a sad thing to say.
And how they're teaching the hedge funds a big lesson because it's now happened 3 times in the last week. So what you think wouldn't happen again has happened 3 times and will continue to do so. Thank you, Dr. Sam. Let's go to Kristen. Hello. Good to see you.
Hi, Kristen. Guys, also, I just want to add, don't be shy to ask. I already said it before, like, really, we understand not everybody is in the market. Not everybody understands finance, economics, and shares, so please feel free to ask. Don't be shy. There's no, help me here, word. No bad stigma. There we go.
Yeah. Kristen. We're going to have to,
okay,
I'll fix that, Kristen.
Hold on, let me do that. Okay.
No, same problem.
You're going to have to re-enter.
Let's see. All right. Let's move
to
JP Play Z25. All right, let's go to either Kristen or JP. Ali, you're the boss. JP looks like I think he's new to Altspace. Let's go back to Kristen. Let's try again. So far, everybody's selling their
Okay,
shares.
so I have a question.
Much better.
Yeah, I have a question. What happens if you like? Will it kill GameStop if you sell your shares? Like, would it destroy the company by selling your shares? Like, I don't know.
Okay.
I would assume so, right?
So, are you asking this question so that you can answer the question as a majority shareholder and owner, Kristen?
Yes.
When you
Yes, I think it makes a difference.
when a director or a majority shareholder sells their shares, it's in the public knowledge that people will read in the papers the next day or on Bloomberg that the owner has sold all of his shares to the company. And you can imagine how that would reflect onto the company itself and what would happen to the share price.
Oh gosh. But if I keep the shares, will they stay even? Like, will they just kind of hang out in value somewhere?
Dr. Sam?
Timon, let me answer that question for Kristen. So if we look at this scenario here, the scenario is a major shareholder sells his shares because he's lost faith in his own company. So by selling shares in his own company, he loses control of his company. But whoever buys his majority shares now takes ownership and majority of those shares. So let's assume that this is a 85-year-old gentleman who doesn't understand new technology. He's run his business like he ran his business for the last 40 years, and he hasn't moved with the times. And there's a young, innovative economist, PhD like Timon Mati here, who decides, I'm going to buy the stock and I'm going to re-engineer this company. So no, the company doesn't get lost. It depends on who takes it over, and it depends on why it's taken over. I can tell you that in most cases, in a situation like this, if the shares are a low price, hedge funds normally buy this company and then do what we call an asset strip. They start selling off the assets of the company piecemeal, and they often make much more money doing it that way. And I'll give you a typical example. If somebody buys your car, buys your motor car, and takes all the spare parts out of your motor car and sells them individually, that person would probably make much more money out of that car than its original price. So, final word, no, if the owner sells his shares, whoever buys those shares takes over control of the company and has an option to re-engineer that business and carry on running with it.
Thank you, Dr. Sam. So Kristen, you can think of like if Ali went listed with Awakened Awareness and the share price rockets and then she sells all of her shares. Think about how you would feel about Ali's intentions. It was same with your company. If you started a mindfulness company, for example. So that's more in a personal way of understanding. So what would you do?
That's exactly what I was thinking.
So, yeah, I feel like that would be really sad. Like, if there's a whole bunch of people that helped rocket my company up to where it's never been before, and then I sell it to make a profit because I know it'll never get up there again. I would be super upset. So I don't think I would do that to people, but then I have to take into account, like, I'm an owner and a majority shareholder, what might be best for me in this current economics, mess that we have. So it's definitely a dilemma, and I don't know.
All right. Well,
outside of my realm.
We'll carry on going. We'll carry on going around, listening to others, and then if you have something else to say, then feel free. Let's try with Dude 9515. I don't think you've been to our events before. So welcome. You have the opportunity to speak or pass.
Yes. Yes. Thank you. I had a question when he was talking about them selling assets. Like, what do you mean by assets? What are they exactly?
All right. We will go. We have to go around, unfortunately, and follow the event. But if you have a question for me, then I'll be happy to answer. But first, dude, answer this question. Would you sell all your shares knowing the share price is overvalued and will never be the share price again? Or will you retain ownership?
I mean, what do I get if I retain ownership? If the business is going bad anyway, wouldn't I want to sell the shares?
Depends. If you're doing your business, if you have a business for profit, then yes. If you have a business for your passion, and you have hope, and you have you're encouraged to do whatever you can to improve your business, then no.
Well, it depends how big my business was, you know. If I had enough money, then I could stop, but if not, then I would go on, of course, until I reach what I want.
All right, good thinking.
So,
Thank you, dude. Let's move to Brown Bomber, another new member of the Social Dilemma. Welcome and hello. You'll be getting the megaphone shortly.
Brown Bomber, hi.
Hey, how's it going?
Good.
I was just dropping in, seeing what this was. This is pretty cool, though. I've been here for about 5 minutes, and I'm kind of into it.
Awesome.
I'll pass for now. I don't really have any questions, but thanks for letting me in.
No problem. Thanks for being here. Then let's go to Altspacevr Awesome. Oh, and just so you know, because we have a full house, if you pop out of this event, there is a low chance that you'll pop back in because there's most times a backlog. So that's just a bit of a warning. And I know some people send me messages saying I'm trying to get back in. We do have a limit of 30. Ali, just help me out here. Next is Paul Laff.
Yeah.
Right.
Paul, hi.
Hi, Paul.
Hi,
Good to see you
hi.
again.
Hi, Paul. Good to see you again.
Yep, you can hear me okay?
Yes.
Perfect.
Can you hear me? Okay. First of all, I must admit I'm speaking from a position of comparative ignorance. That is, I don't know what I'm talking about. However, my feelings are that some of the companies that have gone to the wall over COVID, and although it be a unique situation, were weak anyway. And perhaps I would sell my shares and try and invest in something which is more socially valuable. So I'll sell.
All right. Thank you, Paul. Ali, let's go to Hingle02.
Hingle. Got you. Hingle, hi.
Hi. You have the opportunity. Speak or pass. Nothing? All right. Let's go to
Just waiting for you to accept.
JP Plays.
Okay, no.
It's all good. Seems like everyone wants to sell their shares.
JP, hi.
JP is still new to Altspace, it looks like. You're not ready
Okay.
to be at this event, JP. Let's go to Anastasia Beaverhausen.
Or Anastasia.
Or Anastasia, sorry.
Thank you. I'm kind of in the middle. I would sell just enough shares to retain majority shareholder, generate a profit, do away with the brick and mortar, reinvest it in digital. So I would retain ownership, but yet I would take advantage of it being tenfold the share price and make a little bit of a profit off of the extra shares.
I love what you said, brick and mortar company. Because a company like GameStop is a very old school way of selling video games. It's physical. They sell video consoles, accessories, and games, and they haven't evolved into the next way of selling video games, such as downloadable links, for example, or ways. So that's very interesting. So Anastasia would sell the shares, use the profit, and then evolve with a new potential business. Very interesting. Let's go to MaxiBoy16. Maxi Boy. You have the opportunity to speak or pass.
I think I'll pass on this one. I've only just turned 16 and I have no idea about stocks at all, so.
I only started trading at 16 years of age, Maxi boy. So if you have any questions, let me know.
To be honest, I only.
Ooh, lost you. All right, let's go to Yellow Majesty. If you have something else to say, raise your hand. Yellow Majesty, good to see you. A little bit of a different social dilemma today. But we got to do it. It's trending. It's out there and it's revolutionary.
And I like it. So the reason why I like it, Timon, is partially because I can see that the formulation of the question is based on your passion for this business. And secondly, this is a world, the stock market, that I've been actually trying to learn more and more about since the last 3-4 months, because I have a father who has his own business and his business is going to be listed soon. So I like this question, and it is a good opportunity for me to learn some stuff.
Awesome. So
with regard to the question, I would actually do something similar to Anastasia, but at the same time, it becomes a dilemma for me because it depends also on how many employees I have in my business. So there is this moral dimension. And on top of that, of course, all kind of businesses you want to make some kind of profit out of, I guess. So that creates a little bit of dilemma for me. But because I believe in the good old fashioned and good old school approach to survive a business and continue to do something good out of it, I would probably keep my shares and retain ownership for now. With that said, I may have some additional questions for you later on, which I can ask. Thank you.
all right. Do you have any questions right now that are striking?
Yeah, but I think we could perhaps do as not Uncle Sam, Dr.
Open.
Sam suggested before that we go
Open
around the
table.
couch
All right, cool.
first.
Dylan.
Yeah.
Hello, Dylan. Did you emigrate?
Yep, I'm not Norway Dylan anymore. I think this is an interesting dilemma because in terms of ethics, you would want to stay there and you wouldn't want to see people lose. But the reality is that the system is rigged against us. We saw this in 2008 when the economy collapsed in the United States, and we saw it again in just before the COVID restrictions came in March. A woman lost her Senate seat in Georgia because she was involved in insider trading. And we see this regularly in the European Union, that there's a revolving door between politicians and the banks. For me personally, it would be so tempting to stay with this company that I built and even whistleblow and say, look, the game's rigged. But when you have all these top people that earn themselves doing insider trading, I would have to be realistic and think about my future, and I would sell. But the sad thing is, when I sell and all of society does that, the chance of me having a good reputation and being able to work in finance, again, you know, I'm done. But the reality of it is that the game is rigged. And you can't go against these justice people and these politicians that are all invested in. They get inside information through security briefings.
All right. So
Awesome, thank you.
what would you do, Dylan?
I said I would sell because, you know, being, you know, a part of me wants to be ethical and stick it out and maybe whistleblow, but the reality of it is that I would have to sell just to have a livelihood, because if I was ethical and kept it, you know, I would get blacklisted and end up in poverty. So I would sell just so my family and I myself would have something to eat. But I know that would be the end of my career in finance. I would have to get into music or Big Brother or something like that, you know.
I would argue that, you know, when you are involved in a private or a listed company, the company itself is independent to you. So nothing personal of yours is ever taken away. It's the business that that will become bankrupt and liquidated. So that might be just train of thought is that don't be scared of starting a company knowing that, thinking that you could end up being poor yourself. The company actually protects you from becoming poor. You know, like when you're taxed through your company. You're not taxed through your personal unless you have a salary from your company to your personal account. All right, cool. And then we have Ali. What would you do?
What would I do? Well, if it took me years to build and it was my baby or child in a sense, because it took me so many years to build, I don't think it would be very good for my reputation if I had to pull out in the first place. Second of all, I would keep my shares to answer the question, and my majority shares, of course. And seeing as GameStop didn't try evolve into new technology, I would have tried and built like a sister company on the side, or gosh, I'm losing my words here. And try bridge into new technology and new ways of gaming. I mean, there are, oh my gosh, I'm forgetting. There is potential for growth and to bridge out into new things. And seeing as I've already been in the market and have the experience, I could try bridge out into new things. Okay, sorry, I lost my train of thought.
No, that's good. I mean, we're on the same wavelength again.
I mean, it took you years to build. You're just gonna sell and give up like that?
Yeah.
I mean, that's not very good. What is everyone gonna say?
Yeah.
And if you do sell it and you wanna try to do something else, what will your new clientele think about you? In the sense of, will they trust you, or in the sense that you can just pull out any time again in the future? It doesn't build trust with future clientele. Okay,
Yes.
I'm done. What would you do?
And you know, this is very important because we are now leaving the third industrial revolution way of doing business. As you know, what COVID has done is changed our entire ways of depending on going to people to require a service, going to certain places to require a product. Now everything is either online. There's drop shipping. There are ways that we are now building businesses online. And also the most important thing is not only products and services, but also information. That now things are so easy to start businesses that we are entering into an infopreneur stage of our lives, and in this era where a lot of people are going to be building businesses, and that includes people in this room. You are going to start your own business, and some of the reasons why is because there is a good chance that if you're in the third industrial revolution style of business, there is a good chance that you can lose your jobs. And I have one job that's now in trouble, and so I started Mati Trader. And Mati Trader has now brought on my independence, and it is so much better building a business within the information that I know. So what would I do is that no way in hell would I ever sell my shares. And only one reason. Well, before I go to my reason, I will tell you why I won't sell my shares. So as Ali said, if it took you years to build, if it took you a lot of resources and time, but that's one thing. The most important thing that you need to have with your business is the passion. If you have the passion towards your business, then it becomes your baby. If you have the skills and resources to build businesses, it doesn't necessarily mean you have the passion to continue with it or the love for the business. Right? And if you think about it, there are many entrepreneurs nowadays that have 20 businesses, 30 businesses, they have 10 properties. And how much do they actually put in a lot of effort into each company? Not very much, because you only have so much time in your life. And if this is your one and only business, you hold it and you grow it because you have faith and passion in it. If you sell your shares, you've lost hope for your business and your passion. So going back, even though MultiTrader only started 2 years ago, it's been in the pipeline for 19 years. I've thought about it 19 years ago, saying I wish there was this platform for teaching how to trade shares and also hold hands while doing it, while communicating, while having a relationship and loyalty and building that. Okay? So why wouldn't I sell my shares? It's not the profits. It's the passion. And if I sold it, what would I have? I would have lost the only thing that I've actually put a lot of effort into over the last 19 years. And what a fraud I would be if I were to just try and start something else when I'm going to be doing the exact same thing, you know? So yeah, now I see a lot of hands are risen, so I would like to know, we will start with Yellow Majesty. Your question.
Thank you very much, Timon. As I said, this is actually one of the better dilemmas I've been to because I'm learning stuff. So I'm saying that from a highly selfish point of view. And I have two questions. One is more of a general question. You know, I work in academia as a research and scientist, and one of the terms which we use is the term paradigms to discuss the current nature and state of an area of reality. And when we speak of stock markets, I'm just curious about like what is so peculiar with the current paradigm of the stock market that we see. What signifies the underlying nature of it? And the reason why I'm asking that, Timon, is because I'm trying to understand this phenomenon which led to this social dilemma, that is to say, the whole thing going on with GameStop and the stock market. I've only seen the headlines, but haven't really dig into that. So that's my first question. And just before you start answering that question, the second question was directed to Dylan here. He said something like that the game is already rigged or something like that. I'm just trying to understand what that means. So those are my questions.
Okay. Let's go to the first question. So basically, you're asking what determines this stock market's price prior and compared to how the stock market prices move today. Is that kind of what you're asking? Yes. All right. So what I like to think about it is the stock market is one big auction. It's just a bunch of people that are basing their values on certain markets on either they want the price to go up, so they buy and they have the anticipation that the price will go up, or they sell because they have the anticipation that the price will drop, or they're selling from the shares that they bought in and now they don't believe that the price will rise anymore. So let's say the old school way of determining share prices and market movements was through simple valuation. It's called fundamental analysis. And you have fundamental analysis with micro aspects of a company, macro aspects of a company, and then share ratio analysis of a company. All right. So your earnings, your dividend, your debt to equity, all those terms. And that was basically for probably the last 50 or 60 years, or maybe even a little bit longer, where you could be a monkey, or you could be a simpleton, buy any good blue chip, a top value company, hold it for 50 years, and at the end, your grandchildren or your grandchildren will say, "Wow, you were so clever," and all that. And they were like, "Well, it was easy. The valuation was this, and the prices were gonna go up, so it told me." To answer that is no. It's because it was very limited to, it was share valuation. They would buy good companies, and good companies rallied. Nowadays, we have a huge number of people, and I'm saying people from the ages of 16, 20, 25 on Reddit. If you look at the Wall Street bets, before GameStop, there were 3 million members. Today, there are 5.5 million. So it looks like they want to change the game. As Dylan says, rigged, all right? You can say rigged, or we can say a dynamic. There is a change in dynamic of how the markets are moving nowadays. So before it was share valuation, now it is speculation. So let me repeat that. Before, it was valuating the share. Today, it's speculating. And what are we speculating? We're speculating the valuation, right? So that's like a big part for blue chip companies. Then we have wars. No, not really wars. We have crisis. The pandemic is now a new element to take into account with the stock market. So that's a new form of fundamental. We have whenever there's a terrorist attack, whenever Elon Musk tweets, that has an effect on stock prices and share prices. When Trump tweeted, the interest rates, so macro and all those aspects. But now, with the Redditors, for example, what they did is they said, you know what? These bloody hedge fund managers think they're so big with all their money that they're just shorting. So shorting is when you sell stocks, anticipate the price will drop. You borrow stocks, the price drops, and then you'll buy it back at a low price. So it's the opposite of investing. Investing is you buy low, sell high. Shorting is you sell high, buy low. So these hedge fund companies came up and said, listen, GameStop is a shit company. They're selling old video consoles, accessories. They've closed down stores all around the world. Let's short the shit out of this company. Let the price drop and let it just fade away. Redditors said, nope, not going to happen. You know what? Let's buy GameStop. And when you have a bunch of what they call degenerates, believe it or not, go onto Reddit, go to Wall Street Bets, and you'll see they call themselves degenerates. And you just see a whole bunch of messages saying, buy, buy, buy. Don't stop buying. Just keep going. And this is in a form manipulation, but it's legal. Because we are all doing it. We are, well, the subjective guys are all doing it. Listening to each other, listening to Bloomberg. Bloomberg says buy. This guy says buy. This one says sell. So Redditors got into this community and are saying buy, buy, buy. The price just rallied to $360 from $15 last month and $40 this month. All the way through to $360. Not because of valuation, not because of COVID, but because they want the Redditors community wanted to teach the hedge fund managers and smart money a lesson. And now this is a revolution that is taking place because this is the first one. Then the next day, literally the next day, we had Dogecoin, which is literally a dog coin. I mean, they've got a dog symbol inside it showing that it's such a bad cryptocurrency. Rally hundreds of percents in one day. Why? Because of the social communities. And now we've got silver, which is rallying to levels that we haven't seen in many years. And why is that? Because of the social community is causing a disruption within the movement of share prices. The little guy is finally getting their say. And this is the start. And yeah, I know a lot of people are rooting like, yeah, go. For me, I don't really care because I don't get involved with dangerous companies like GameStop, like penny stocks. I don't get involved with the Redditors community. I just go about my blue chip stocks, and you'll never know what I bought or sold because when I buy something, it's because the strategy's lined up and not something else. Okay, let's go to the next question, and that was rigged. Dylan, I want you to re-question that, what you meant by rigged.
Well, what I meant by rigged was a good example was there was a U.S. Georgia senator named Kelly Loeffler, and a lot of people got angry at her because the United States had the lockdown in March, and they noticed that she dumped a lot of retail stocks and started investing in medical stocks. And she alleges that she knew nothing about that, but then it came out that there was a Senate briefing that was secret where they said they were going to shut down all of American society. And there are many examples of this. It happened also in the European Union and the United States during 2008 with the car bailouts and the bank bailouts. But the question I had for you, Timon, is if one of the FANG companies like Apple or Google wanted to buy Mati Trading and offered you billions, but said that you could have a minority shareholding and you would still have a limited amount of say, would you do it?
It depends on how much control I have over Mati Trader, because if
So
they,
it really is your baby.
because this sounds more like I'll call it a hostile takeover in a way, that when a company says, listen, I'm buying out your company and you're going to get a good amount of money, but we're basically taking control and ownership, then it's not going to be Mati Trader. It's not going to have that personality. No one will ever run it better than I do, because I am Mati Trader, you know. And if they run it, then it's not Mati Trader anymore. It's something else. So yeah, it is.
Because it seems like the goal for most companies is the IPO, the initial public offering, and then after that they can do, they can relax on an island or they can move to Singapore like one of the Facebook founders did.
A lot of them do that, yes. But Mark Zuckerberg is one guy that was offered $200 million, and they said, we would like to buy Facebook, and he said nope, because that is all he's got. He was passionate about it. He never was in it for the money to begin with. He wasn't an entrepreneur. He was a programmer. And that's how I'd also like to see it, is that I will build it my way. Let's go to Scar. Hello, Scar.
Hello. I came in a bit late.
All good.
And as I said on Facebook, I don't know anything about this. So I just have a question for you guys and maybe everyone in the room. So when I read this slide here, and I imagine that I've built a business, which I haven't done. I hope to in the next 10 years, but it's not going to happen anytime soon. But if I could sell it for billions or whatever, 10 times more than it's worth, and then I could invest that money in creating something even better, would I still be considered a sellout? Or would people be willing to get on board with that?
Well, you won't sell it for billions. You'll sell it for 10 times what the share price is trading at.
Which is considerably more than I would have, I assume.
Yes, absolutely. But also you would lose your ownership. That's why I made sure that you sell all your shares, knowing that you would lose the power. You would lose, you might even lose your company.
But so what is to stop the supporters of the company following me to my new company and staying with this old brand?
Yeah.
If I was going to put out a public announcement saying, I'm selling this is my new brand, or would there be some kind of gag on me doing that? And they'd be like, you can't do that.
No, you can do that. You can start a new company. You can move to a new company. But I mean, if you had... That's why the dilemma is, if it was your baby that you had a lot of passion for, that you grew it, would you sell it and then start something new? Like I'm saying, if I sold Mati Trader and then I started something new, I can't think of anything else that I would do, even if I did it something similar. But let's just go to Dr. Sam. I think he has something to say to you, Scar. I'm not sure.
Yeah, Timon, so... it's all very well being noble. So let's just concentrate not on what Scar said. Let's just concentrate on GameStop. GameStop was established in 1984. It saw its heydays in the late 1990s and the early 2000s, before the digital revolution. It was selling out of a shop, retail shops throughout the USA, was selling video games, console games, and other accessories. But they never moved with the times. They never digitalized. They never had downloadable games. They just carried on business as usual. And what happened is that this business started deteriorating. It's a listed company on the stock exchange. It has a number of shareholders who invested good money in the beginning, and they were failing their shareholders. They were not giving their shareholders the right returns because either they weren't interested or they didn't have the capabilities. So if we go back to what Anastasia said, which is the model thing to do, is sell your shares at a high price, take your proceeds, your entire proceeds, and reinvest in your business by getting somebody who is capable of running your business in the fourth industrial revolution. So that is the moral component of it. There's another component. What happens if Nintendo knocks on your door and says, I will give you 10 times the price for your business? Now, you weren't able to grow your business. Your business was failing. You were closing stores, and a mega successful company like Nintendo wants to buy you out. You would be doing an injustice to your shareholders if you didn't sell to Nintendo, because Nintendo is a successful business. So there are the two components of the moral dilemma. You follow Anastasia's route, but you can't do it yourself. You've already proved to the world that you've failed. You're a failing business. Or you sell to Nintendo, profit it, make your profit, but a better, more capable company takes over your business and runs it for the betterment of your shareholders, because you're always responsible to your shareholders. And just to clarify something, if we go back to Anastasia's moral high road, you don't have to own 51% shares to be the controlling shareholder. When there are millions and millions of shares out in the market, you only have to own maybe 10 or 15% of those shares to control the market. So, and that's exactly with Zuckerberg. Zuckerberg does not own 51% of Facebook. He owns a minority amount of shares, but he owns a big enough shares to influence the vote, and he has the confidence of his investors. Okay, so that's the first thing. Now I want to come back to Yellow Majesty. He said something about he wants to understand the paradigm of the stock exchange. So like Yellow Majesty, I'm also a scientist. I'm a medical scientist, believe it or not, but I do have qualifications in economics and accountancy. So I have spent a number of years in the academia. So I have a small understanding of the stock exchange. In fact, I served on a board of directors of 4 listed companies, and I listed a company. So I have a reasonable understanding of listing. So the paradigm is very simple. The stock market is a public forum where people can buy shares, as you all know, can buy shares in a company that is prepared to sell to the public, and that's why it's called a public company. And there are 2 reasons for investing. You have the venture capitalist who wants to invest in a business and in a very short period of time exit and take profit. And then you have the hedge funds or the mutual funds who want to invest for a long term to get a steady growth, a steady return on the investment for their investors. So the critical paradigm of any company on the stock exchange is growth. Not necessarily profit, but growth. And by growth means it grows its business, it grows its revenue. And you can think of, there's a number of companies that have grown all over the world, their business. The Amazons of the world, the Ubers of the world have just grown their businesses. And investors see a steady return. Okay. The problem with the way stock exchanges are run nowadays is that the human element has been taken out, and the buying and selling is normally done by algorithms. So very fancy computers decide when to buy and sell shares. So what happened with GameStop? GameStop is a company, it had a lot of shares on the stock market, and slowly its share price was starting to go down, and it was public knowledge, and it was going down because it didn't adapt. It was a bricks and mortar company, and it didn't embrace technology, and it was going down. And what the hedge funds said, because remember, the hedge funds are in and out. They're only there for profit. There's no emotions involved. They are mercenaries. They just want to create profit. So what they said is, here is a company. It's got millions of shares out in the stock market. The share price is $15. We think that because it's got bad fundamentals, bad financial results, bad history, that this share price is going to go down from $15 to $4. So what did the hedge funds do? They started selling shares that they didn't own at $15, which you're allowed to do. For some reason, you can sell shares which you don't own. They claim that they borrow it from the broker. So they sold at $15, and they said, well, great, this company's doing so badly. In a couple of weeks' time, the price is going to be $4. And then we will buy at $4. We will give back the shares to the stockbroker, and we will score $11. That's what they thought. But what happened is a group of amateurs on a platform called Reddit saw that there was a massive short selling of GameStop, and they said, you know what, we are being bullied by these major companies, and us as individuals, as honest people just trying to make a small buck out of the stock exchange, we are pushed out of the stock exchange. So let's get together, let's get 2 or 3 million people together, and let's each buy $100 worth of stock. So now you can imagine, the stock went up to $400. Now the hedge fund had sold his shares at $15, thinking it's going to be $4 to buy it back. Now he's sitting with a share price climbing like mad. And every time it goes above 15, he's losing money. So what did the hedge funds do? They started buying shares as the share price started climbing. And they started pushing the share price up. And some of them went bankrupt, and some of them have gone on their hands and knees to the Biden administration and said, please bail us out. We need $3 or $4 billion to be bailed out because of their greed. So that's what happened. Somebody asked me a question about what is an asset strip. Is that person still here? No. Okay, so we're not going to answer that question. All right,
Okay.
Timon, I know you've got another question.
Thank you.
I've had my say.
Thank you, Dr. Sam. Yeah, so there are two main dangers with shorting, which I think the hedge funds were being completely reckless. The first thing is that when you short, so when you sell stocks that you don't have, the problem is that there is potential for unlimited losses. So when you buy a share, like as an investor, the lowest price that a share price can go is 0. When you short shares, the share price can go up hundreds, thousands, or even higher, percentages wise. So it means that your loss potential is unlimited. And that is very reckless for hedge funds, especially when they're dealing with people's money. And now that they become bankrupt, they're unable to give the money back to the people because they thought it's a good idea to pick on these companies that are not doing very well. The second danger is that there are a limited number of shares when it comes to shorting. So just like when you buy shares, there's a certain number that you can buy. When you short shares, there isn't that security as there are with buying shares, which means that you can short more shares than they actually exist. And the biggest problem is that one of the hedge fund managers, Melvin Capital, they shorted GameStop, and they even shorted with more shares than were available on GameStop. And that's why they had to ask for a $3 billion bailout. And the problem is that not only can they get, they can't get out of their shares now. So if it's at $360 and they can only get out of a certain number of shares, but they can't get out of all their shares. Why? Because the shares don't even exist. So this was completely reckless for hedge fund managers. And I think that they need to add some security measures or circuit breakers or something to just prevent these occurrences from happening in the future. I do want to go to the next question. Mantis VR, do you have a question?
Is it okay if I respond to some of what you said?
Absolutely, yeah.
Yeah, I find it interesting that you use the term reckless and not greedy to start off with. Because I think if you was talking about everyday people, you probably would have used the word greedy. And I just kind of find that a little bit interesting. So first and foremost, let's just be honest.
Yes.
These big hedge funds have been bullying the little person for far too long, right? This has been going on for too long. They've been manipulating. See, everything you described was from the hedge fund side. That's pure manipulation, and being able to buy, to be able to short a market with shares that you don't even have, and you're kind of borrowing to short. That's manipulation. But when the little person does it, that's seen as like, oh, you guys are manipulating the market. You know, what we're obviously seeing at the moment is a change in as they say, the old guards. You know,
yes.
There's a change that is happening right now, and as someone that's heavily into cryptocurrency, personally, I can see in the future shares being tokenized, and you know, because even now, as a let's just, as they say, a retail investor, you know, it's not everyone that can invest, but with something like correct me if I'm in the case of GameStop, it was because it was listed with, is it Robinhood, if I remember correctly?
Robinhood,
it was listed on
AMD Trade.
Robinhood site.
Yes.
Yeah. So a lot of retail investors were able to get involved, and so you said, like, in terms of it being obviously as well, like the moral dilemma behind that. I think if someone, you know, at the end of the day, it's a market. Like, people can buy and people can sell. If what I'm selling, you are happy to buy that item, I don't kind of see the issue. I know that might sound a little bit horrible, but I don't see the issue. At the end of the day, I think it's important for people to do their own research on what they're buying. I'm going to make an assumption here and assume that the people that bought the GameStop, the GameStop stocks, they didn't buy like huge amounts. They just bought like $100, $200, basically amounts that they were willing to lose, basically, to keep a store open or to say screw the system, right? Like I said, I feel this bullying has been going on for way too long. These guys have insider information. We know that it's happening. These guys are using computers using the hottest algorithms to know, to the point where I'm sure they're starting to use artificial intelligence to the point where they actually know what our reaction is going to be when something happens in the market. I mean, come on, that's bullying. That's That's the real manipulation happening.
All right. So you've mentioned a couple of things.
Anyway.
I'm not going to mute you just yet, Mantis.
Yes,
okay.
sir.
Why I said the hedge funds were reckless and not greedy is because greedy is where they want to profit in their pockets, which they do. Reckless is them being irresponsible for shorting a huge amount of money, of clients' money, that is now that is now locked. So yes, of course they're greedy. All hedge fund managers are greedy. I'm not going against that. But in that case, they were reckless. And even I don't know
Fair
which person said it, but they said that anybody who shorts companies for clients share wise, they shrubbery companies. They are completely reckless and completely irresponsible. And
Okay.
yes, it is greedy. The Wolf of Wall Street, not Jordan Belfort, but the Wolf of Wall Street, which have always been hedge fund managers, have found loopholes, have used algorithms, and have found ways to manipulate the market.
Yes.
But it has been done mostly, mostly it has been done on a legal basis, and that's just with money. When you put a lot of money into a stock, into a share, there is legal manipulation where people will say, "Hey, what's going on? This guy put a whole bunch," when it's just a bunch of banks that are just transferring money from one bank to another. Okay, with this revolution. So now you're talking about cryptocurrency. I 100% agree that the tokenization and tokens will be moving from shares onto the blockchain system, which is going to help a lot because it's going to stop the manipulation. It's going to take away the middleman.
Exactly.
It's going to take away the brokerage and all the costs that are involved in the middle of it. And it's going to give the people the power to buy and sell automatically, instantaneously, and without knowing that the money is going into fat pockets of hedge fund managers. So as I said in the beginning, I know you weren't here, but basically I said that the third industrial revolution, the idea of restaurants, the idea of having these huge businesses with products and services is probably going to be a thing of the past. Similar to the world of accountants, the world of stockbrokers. Soon those jobs are going to be taken away because artificial intelligence is going to take over, blockchain is going to take over, and also the people are going to run their own businesses their way with at cheaper prices. I'm running my business and already I feel like I'll never go back to a standard job, and also trading, obviously, which is works very well.
Cool.
But yes, there is a change, there is a disruption, and that's why I think it's important for everyone to be here because you guys, either you're going to lose your jobs or you're going to keep your jobs, and you're going to be building your own businesses, your own empires, and eventually you might consider going limited. So if I was, so going back to the social dilemma, if I hold my shares and it went to that $360, isn't that the point of listing a company? For the share price to go up so that if more people bought and more people had faith in your company, that the share price will go up regardless of the current problems. So the closing down stores, what if those things are temporary issues where they need new ideas to build it on, and they needed that kick which brought the share price up, the capital, and then they can use the profits to start distributing to shareholders, for shareholders to start taking it a bit seriously, for projections, isn't that the point of listing on a stock market to begin with? You're not listing to sell the shares. You think Zuckerberg is even remotely thinking of selling the Facebook? No. Elon Musk, he's still working 10 times harder than all of us put together in this room. He's sleeping in a factory non-stop, and yet he is working. He's stressed, but he feels like he's the only one that can do the job, even though he's the richest man in the world. Going back to manipulation, very important for Dylan and for you, Mantis. And that is, I suspect that there was a illegal activity that took place with regards to GameStop. And why I say that is one reason. The share price did not gradually move from $45 to $350. It opened the next day at $350. That gap from moving from that and that level of volatility and liquidity is probably the main reason why the SEC, and I'm sure even possibly the FBI, will be analyzing this situation, because not only the hedge funds lost this round, the problem is this sets a precedent for a lot of companies going forward.
Yeah.
And what if you are one of the guys who shorted the company just for a quick trade in for a couple of weeks? You know, I mean, I short 30% of the time. What if I was the guy that shorted that unfortunate position and then woke up at $360 when I shorted at 45? Portfolio's blown.
Wow.
Well, depending on the percentage you put in. So, Mantis, do you have any other questions? Yes, they're reckless and greedy, but mainly reckless towards their clients.
No problem. No, that I think that answers my question. Thanks.
Pleasure. Thank you for your honesty. Let's go to Boston GT. Question or answer the question behind us. If you
I had a question.
Yo.
If actually two questions. If the owner of GameStop wanted to sell all their stocks, he could, correct me if I'm wrong, they couldn't just sell them for $350 a share. They'd have to find somebody to buy them at that price. They'd probably end up having to sell it less than what the original was, right? And also my second question was, I'm sorry, I forgot what the second question was. But go ahead, you can answer that question.
Yeah, exactly. I mean, it's all supply and demand. And it has to be public knowledge. But if in the contract he can sell his shares whenever he wants, depending on whether there is volume available to sell to begin with.
I remembered what my second question was.
Yes.
Would it make sense for him to split the shares, to split the stock, like?
No, you can't just split the stock instantaneously. This is something that needs to go out on the SENS board, the Stock Exchange News Service. It needs to be discussed over a long period of time, a couple of months, to pre-warn the shareholders that there's going to be a stock split. And this also prepares the shareholders for the fact that their shares are they're either going to get more shares or they're going to get less shares, and the price is going to go up. But these are all decisions that are made within the public domain. And because GameStop was a one-day wonder, because it was, when I did a video on GameStop, if you guys are interested, head over to timonandmatti.com and put in your email address. And the reason is because tomorrow I'm actually going to be sending out the full video illustrated with the chart and all that that I did on the 28th of January. And I said that there is a good chance this price is going to drop tremendously. At the time it was 360. The next day it was 190. That was the next day. So it shows that there was major there's a lot of information that we don't know that took place purely because of those jumps. And I don't know if there was intervention within the inside information, but we'll still find out. I can't answer that. Does that answer your question?
Yes.
Cool. Thanks, Boston. Let's go to, and I have extended this event for 12 minutes. Ali, how are you doing there?
I'm still here. I'm listening.
That's good. How are you doing? Have you got any questions?
No, they've actually been covered. Thank you. Awesome.
Awesome. All right.
Let's go to hand raisers.
Let's go to Paul Laff.
Yes, I don't understand why we should preserve dinosaurs, but one thing people seem to not be concentrating on is the human aspect of this. You know, people's pensions are at risk here.
Yes.
They're real humans. It's not just shares, it's people's lives that are being affected.
Exactly. That's what I meant by the term reckless. And the thing is, Paul, is that the damage is done. These one-day wonders are going to ripple, for some people, a lifetime of damage. And that's why I'm saying that these hedge funds need to consider very serious measures to protect themselves, or the stock markets need to consider some type of circuit breakers to stop these jumps at such levels. They need to stop it, or else people will continue losing their hedge funds. However, for me, if anybody invested in GameStop for their pensions, there is a bigger problem than the money they're investing in, and it's rather the education as to what they're investing in. There needs to be more education, because people are oblivious to when they go to a hedge fund and the hedge funds say, don't worry, we are looking after your money, we've shorted this company, and they don't even have an idea of what that means. Like, we should have the choice to say, hold on, I'm 65 years of age or 70 years of age, I'm too old for you to be taking on these dangerous positions, and you have to consider, you got to be more risk averse. And if these hedge fund managers are not doing that, then yes, they're being reckless, they're being greedy, and the people should be more educated as to the hedge fund. You don't just magically make money because they tell you that you're going to get 20% a year. You need to be transparent. They need to be transparent. They need to show you exactly the baskets of shares or indices, commodities, whatever you're holding, and see the past of what they've generated, what they're doing, and see where you are in the risk aversion. So if people are losing their pensions because of GameStop, there is a bigger issue than shares and money, and that's their education level. They need to improve their education. Now let's go to Janjay Baxter. You have
just buy Dogecoin.
Sorry?
Just buy Dogecoin.
You Dogecoin. The Redditors are on Dogecoin as we speak. I don't know. I avoid volatility. I'm 33 years of age and I still don't go for those volatile stocks. So just be careful. And let me tell you this as a warning. Because a lot of people, why do you think a lot of people are now getting onto Reddit? Because they're saying, I'm going to get rich from these degenerates. Listen, these hedge fund managers, they might have been caught off guard, but they're going to fight back. They are a lot more awake. They are very clever. And they are going to make a lot of these Redditors bankrupt because they're following degenerates who are trying to crack the system. And yes, they are going to crack the system now and then, but is it worth the risk? Like, if you're super young and you're saying, whatever, I've got money that I can cut up, perfect, go and do that. But just know that that money that you can cut up can be tenfold more that you could lose. So it's not like going to a casino. You go to a casino and you lose the money you put in. In the stock market and investing, you can lose 10 times more than what you put in. You can blow your portfolio. You can be a very successful trader, make millions, and blow all your money overnight if you're thinking greed. Greed never works. I'm sorry. It's never, ever worked. DJAK007.
DJAK. Yes, I've had some experience day trading for the last year and a half, and I guess maybe that is a form of passion, if you want to call it that. And I've seen quite a bit of volatility in the markets. What I wanted to ask, first of all, I just wanted to respond to the last question regarding what you would actually invest in terms of long term. Would you not consider maybe a blue chip stock to be that's a little bit more secure than just a general stock, unless obviously it's a good solid stock, like Apple or Tesla or one of those large caps that right now are being very successful. Yeah, so basically, I just wanted to know your thoughts. And also, I think, we've seen a lot of variation with BlackBerry lately and AMC. So I'm just wondering if Reddit also has their hands on those as well. And Kodak in the past, we've saw go up and down.
All right. All right. I get so many. Those are the questions that I get like on a daily basis as to what should I buy, what should I invest in. Like, it's all down to your personality and what your risk aversion level is. Like, I can tell you, buy a blue chip stock. This is going up, and I've got one philosophy: buy high, sell higher. I don't have the philosophy of buy low, sell high. I really don't like that philosophy. If the market's going down, it's not going down so it can turn up. If a market's going up, it's not going up to turn down. Okay, even though the egotistical approach is that there is the bubble, it's going to come down. Listen, just follow the trend. Why do you want to be egotistical and want it to turn? Just enjoy the trend while it lasts, and then grab a little bit of the upside, grab a little bit of the downside, and appreciate it. But what's important to note is that with regards to buying and selling, I find it that the stocks and the sectors that you choose are cyclical. Because 4 years ago, if you said, Timon, what would you want? So let's say 6 years ago, if you said, Timon, what sectors would you buy into? I would have said retailers. And I would have listed a whole bunch of retailers. Now, the retailers have been going sideways for the last 3 years. So now that's out of my range. And now I look at the resources, and for some reason, resources are taking over and are hitting new highs. But resources had a gap of 8 years of sideways movement. So it's completely cyclical. Look at what the markets are doing. You can look at the projections and hold over 50, 60 years. But if you're like me, who invest only, when I only trade for under 35 days. If I invest for longer terms of 2 to 4 years. Okay? So, but also diversify your positions. If you're thinking of just buying BlackBerry or Apple, rather diversify your positions so that if these companies turn down, at least you have other companies that will move up. Have a little bit of commodities, hold a bit of gold, hold a bit of Bitcoin, hold a bit of retailers, technology. All those are, they work. But it's up to your personality.
Okay. And semiconductors are doing fairly well too.
I'll take a look at that. Semiconductors and renewable energy are going to be the star children soon, as people are more aware of the environment and geopolitics. Let's go to Kristen. Kristen, sorry, you've had your hand up for quite a while. Thank you for still being here.
I have to actually run out in a second, but I have maybe an ignorant question, and I apologize in advance because I've learned a lot. But isn't this like an artificial driving up of stock? Like, if GameStop doesn't take this as an opportunity to move away from the brick and mortar and digitalize and reinvest that money into their company, this is sort of a lost cause. You've driven up stock for the sake of driving up stock to really kind of stick it to the market. But what about all of those small people that have driven it up? I mean, they're just basically what you said, shredding money. So, if you got money to shred away, have at it. But I mean, they're really going to do a huge disservice if they continue on the path that they've continued, going back to what Paul had said earlier, is why are we so invested in keeping a dinosaur open who has already proven over the past maybe 10 years that they're not keeping up with the times. So I guess I'm a little lost. I understand the bigger part of it is they're doing it to really prove a point, like a bigger point. But back to this very specific question, if he didn't plan on doing anything, it would be almost ignorant of him not to sell it off and let somebody else reinvest that money in and do a service to the investors, those little guys that took a time out to invest in their company because maybe they believed in it, maybe they didn't, but he's already shown that he's not effective in bringing his company up to where it needs to be. Right? I mean,
what is the question, Kristen?
so I don't understand, what is the big deal of selling it off and letting somebody else have at it so it doesn't just continue to won't it eventually crash anyway on its own if there isn't a big restructuring of what's going on?
Technically, yes. If you look at the share price, why they haven't evolved since the share price has gone up to 360 is because they can't do anything with that money unless they do sell the shares or if they consider something else. But the thing is, this is a short-term effect that has taken place, and now we will see over the next couple of months if shareholders start to push up the shares and value it differently in terms of where they believe it should go and what people should do with the money. But right now they are at losses. They declared their losses. They cut down stores. But I don't know, maybe Dr. Sam, you have something to say? Because, listen, Kristen, you brought up some very interesting points. And we haven't really heard the information of what the shareholders are doing with GameStop at the moment. What I do know is that it's at $225 still, which is just incredible. Wow. You'd think that it would just drop down to its valuation of the shares, but what it means is that they're still holding shares. They're not getting rid of them. They're not selling them. But what I suspected is that when the share price goes up so quickly, so fast, you get three types of movements. You either get a panic frenzy where the Redditors are like, damn it, this thing is now going to drop, sell, sell, sell. And they do the opposite. Okay. It's also called a short squeeze, which squeezed out all the what's it called? The shorters. They squeezed out all the shorters, and now the buyers are just holding. The other thing is that they might become scared that they're going to be all under investigation, because now everyone is going to be called and say, what was your intention of buying GameStop, if they have more inside information. So yes, this is going to go on for the next couple of weeks, months, and it's going to be the precedent that was set for the years to come. But it's going to be very interesting that now that we are within the knowledge, I mean, I've been in the knowledge for, or in I've been in the markets for so long, and now people on Facebook are sending me messages about GameStop. So for me, this is a very exciting era, because it means that they are interested now in the dynamics and the paradigm shift within the revolution of what's going on in the markets. As I said, I have never seen anything like this in 19 years. So this is really exciting. And it's great that we're all in this Dilemma Lounge today talking about it. Dr. Sam, yes.
Just to respond to Kristen, so I've lost the train of thought, but no. So remember that the transactions that are taking place on the stock exchange has nothing to do with the company. Those shares are being transacted between investors.
Yes.
The company is not selling its own shares. So any profits or any losses that are being made by the investors in that company. So yes, if the director has a few shares and the director speculated, the director in his or her own name would lose that money. But this share price of $350 doesn't affect the company in any way. The only way it affects the company is if the shareholders of the company sell their shares, they lose control.
Right.
So that's a very important thing to bear in mind. The other thing, I think DJ's gone. No, DJ is here. So he mentioned AMC.
We've lost you, Dr. Sam. I think we lost your microphone. Just raise your hand. Yeah, just raise your hand. Let's go to Richie, and then we'll go back to Dr. Sam. Richie.
Hey, you hear me?
Yeah.
So I just wanted to respond to Kristen's question a little bit. So I thought GameStop, they were doing something with the stock price being so high. I thought they were planning to issue more shares so that they can pay off their short-term debt and survive for another 5 to 7 years. And so that does impact the company. The share price being so high allows them to issue these additional stocks, and they only have to issue so many versus issuing like millions of stocks in order to pay off the debt. Is that correct?
What is the question? Because they can't pay off debt with shareholders' money. Remember, think about it like this.
No, but they were going to raise more money by issuing more shares, by raising capital and raising issuing more shares.
And
right?
how and where did they get that money from?
Well, they take the current stock price and they're able to say we're going to issue X amount of shares at this price and then bring them out to the open market, right?
No, it doesn't work like that. As soon as they increase the number of shares, the share price will drop. If they take out,
that's how.
If they take out the
yeah,
number
that's
of shares,
how it would work with supply and demand. But those shares do get put back into circulation.
Yes, but the thing is,
and the company, that's how the company raises money, right? They do this. Other companies do this all the time in order to. Even Tesla did this recently when their share price was very high. They decided to issue some additional shares, right?
You have fun? Yes. No, absolutely. But no, they can't sell shares because this is illegal. They need to state to the public what they're doing, the reason for this selling of the shares, and where the shares will be going. And the thing is, you as a majority shareholder, or if you're an owner or something, you lose control within the company, and you also have the risk of a hostile takeover where some other shareholder might buy your company as a whole. So those are the risks with selling your shares. Does that make sense?
Yeah, I get that. But I was just trying to comment on Kristen's question or comment about what the company is doing with the stock price so high, rather than just it being a waste. I think they are actually doing something with that stock price being at a record high, or
they can't
at
right
a
now.
very
Right now,
high.
right now it's under investigation. So
Okay.
their hands are completely tied. The SEC is on it.
Right.
I think the FBI will be on it soon. For a share price to jump at that unsustainable level, based on their low fundamental and valuation, it would be very dangerous for them to do anything or sell their shares, because that is just sneaky. And every time a shareholder,
They wouldn't.
Yeah.
They wouldn't be selling their shares. They're issuing additional shares for the company.
All right. So you need to understand that when you all right, I got to explain this in another way. Let's say you have 100 shares in your company, okay?
Yeah.
And each share is $10.
Yeah.
And you want to add another 100 shares, right?
Yeah.
So you throw 100.
Yeah.
So you throw another 100 shares into the pool of shares. The shareholders are automatically told that they will be getting that their shares will now be worth $5.
No, that's a stock split. That's different than what I'm talking about. So what you're talking about is a stock split where everyone gets double the amount of shares and the stock price drops by half.
Yes.
What I'm talking about is issuing debt on from a company and issuing additional shares based on the debt, and the company pays back that debt through the stock.
I'm not sure about that.
I'm not like 100.
Maybe in America they can do that. I've never experienced that here where I am.
Yeah, I mean they do this all the time to raise money, because usually a company after the initial IPO, right? The IPO has a certain number of stocks.
Correct.
But if they need additional money, there's a second offering, and there's additional offerings with additional more stocks available.
I have seen that where they go private and then they go limited again with another IPO. But listen, these are all in talks over a couple of months. This is not something that can be done in a day.
Yeah.
The shareholders need to
No, I'm not saying about that. Yeah, but I think...
And so they can't do anything now with this GameStop debacle because of such short-term notice. This is something that would have been to the shareholders' knowledge for the last 6 months.
Yeah, but because it's so high, they can start planning a month or two, saying we want to.
They can they can do that because because even though they know that the valuation of the shares is around $5, and yet the share price continues to stay $200, means that absolutely they may take consideration into the actions into the future. But first, the investigation needs to take place. The SEC needs to call everyone that bought shares in GameStop, and they will call everybody. I've had the SEC call me once upon a time, even though I was losing money, and I was like, you guys should be calling the people that gained money, not lost money.
Yeah.
All right, cool.
But yeah,
we've only got a few minutes left, but I just want to go to Dylan. Do you have a question?
Actually, it's a comment. Could you do a social dilemma on blockchain where the question sort of explains what blockchain is? Because I think it's the future. People think it's just Bitcoin, but it's so many things.
That's not a dilemma. That is an entire new event. I actually did host multi-trader events for free on Altspacevr for a while, and they did great. And maybe I'll consider it in the near future. Ali even went to a few. And I did definitely discuss blockchain. If you go to my YouTube at multi-trader, you'll see Altspace multi-trader, and we discussed full on with blockchain. It was a good 2 hours. So you can actually go and watch that seminar or webinar, whatever you want to call it, the discussion event. And all of them, you can go to multi-trader, just go to the Facebook group multi-trader and the Facebook page multi-trader, and then you'll get all of the videos and if you have any information. But thanks, Dylan. Let's go to Yellow Majesty.
Thanks. I have a very stupid question, but before I ask that, I just want to comment the blockchain idea. I once went to a research conference with over 200, 300 people from various parts of the world within the field of information systems attending the conference, discussing blockchain, and there wasn't a consensus about what blockchain was or is, for that matter. So I think Dylan had a good point explaining what that is. To my stupid question, Timon.
Yeah.
And this is probably my last question, then I will drop off. So before I ask that question, I just would like to thank you for your generosity in extending the time and sharing all this wisdom, because these are important stuff you have been talking about. Very interesting, and I'm very thankful for that. Usually you take a fee or two for these kind of talks, so we got it for free. That's nice. My question is, who is actually going to benefit on the implications of this phenomenon with GameStop?
I would say short term, it's the shareholders that, or the derivative holders that bought GameStop, went to $360, sold it. They benefited whatever they got from that. The bigger benefit is with the revolution, that this sets a precedent for now the guys to follow certain communities to possibly profit in the short term before the hedge fund managers wake up and start putting measures within it. And a lot of people are taking advantage now of these degenerates. And I'm sure you read it. People that were never shareholders, and all of a sudden they thought, "Ooh, I just got to follow these bunch of simpletons, and I'll make money." As most people do, because they don't want to follow the professors anymore. They want to follow the average, authentic person who's made it in this dog-eat-dog world. So 2 people, those that are benefited are, well, 3 people. Those that benefited are those who sold as soon as it hit 360, got out, banked their profits and said, "Thank you very much." The second is the precedent to the revolution that's taking place. And the third is, well, I'm sure the GameStop owners are laughing all the way and just loving the commotion, because now, for the first time in their life, the entire world knows them, and there's no such thing as bad publicity. So they must be loving it as free advertising. They must be doing this, and if it was all legal, it must be the best. It's definitely the best thing that's ever happened to them. Because look at the share price; it's still $200, even though the valuation is at $6.
Very interesting. Thank you very much.
Thank you very much for sticking around for so long. And I'm so happy we could have this discussion. Remember to follow VR Digital Citizens Facebook group, Oh My Brains, and we will see you in 2 weeks' time. We've started doing this fortnightly. So the social and moral dilemma is only next week, Monday and Friday. And then Oh My Brains is this Thursday. Greek Mythology is Sunday. And Awaken Awareness is Sunday. Ali, thank you so much for being here as well.
Thank you so much. It was really interesting. It was really awesome. Thank you all for being here.
And I'm going to be taking off mute. And you guys can stick around, have a chat. You can go to the Greek Taverna if you want. There's a nice portal on the top right side. And that's it. That's it from me. Thank you.
Thank you.